and they will continue aggressively purchasing both gold and silver in order to diversify. They don't care whether silver is $50, $60, or $100. They will just continue accumulating. The Chinese may be patient buyers accumulating on weakness, but you can bet that their relentless pursuit of physical silver will eventually push the price to $100 an ounce. That from King World News out of London, a London source that they were talking to in the last week. You can read that article. Get our free weekly newsletter. The telephone number, 1-866-623-2002. Jim Rogers coming out this week saying short treasuries and buy commodities, especially silver. He said silver has certainly gone up a lot in the last 9 to 10 months. There's no question about that. But remember, silver is still 10% below where it was 31 years ago. He says, I bet you do not know many things that are 10% below where they were 31 years ago. Silver has been going up on a historic basis, but, when you look at it, it's still very depressed. And it's cheap in relation to gold. Also coming out this week, and I thought it was quite interesting, the CEO, Dennis Wheeler of Coeur d'Alene Mines, said silver, the rally is no bubble, and as the price appreciates, it will break the old record of $50. He says, we're in a legitimate market driven by financial interest in silver and strong industrial demand. Interesting point, and he was speaking at Bloomberg Linked Precious Metals Conference in New York. Supplies are relatively inelastic, tight supplies. The rally is very different from the surge in the late 70s when the Hunt brothers tried to corner the market, and in 1980 when prices touched a record of $50.35 an ounce. Frank McGee, the head dealer at Integrated Broker Services, said at the conference, there is no manipulation going on in this market. At least that's what he believes. We obviously differ. It does not take a lot to stop a market until this market decides to go. And he says, I'd like to categorize silver as a freight train. Discovering new deposits has become more difficult while older mines cease production at a time when demand continues to grow, according to Wheeler. And their company obviously is based out of Coeur d'Alene, Idaho. Higher prices are not a short-term phenomenon, and the metal may jump to $55 by the end of this year. That according to Frank McGee. But Harold, some people coming out this week very, very bullish on silver, short-term, long-term. And these are names that we can trust, people that have talked about silver in the past, not someone that's popped up out of the blue here in the last week and is a sudden expert.
Exactly. Well, again, our listeners know who to listen to. So the fact is that the markets are doing exactly what they should be doing. Silver is catching up to gold. The ratio should be 16-1, and I'm sure that we're going to get there. The fact is that this is not like a runaway freight train. In actual fact, the moves in the market are what they should be doing. And I do agree 100% that, when we first started to see 10 or 15 cents in a day in silver was a big deal. Then it went to 20 or 30 and 50. Again, $1, $2, which is what we're seeing at this particular point, almost on a relative basis, almost every day. But there is going to be times when the market is going to start to move substantially higher. My personal feeling is that I like a much more orderly market. I don't like when a market goes ballistic, and I don't think that that's really going to happen until the market is coming to an end. And I don't think that that's going to be for another 4 to 5 years. What I truly do believe is going to happen is that the U.S. is not going to raise interest rates. They won't do it for 2 years because they're so concerned about the stock market and the real estate market, which is not getting any better. So the bottom line is that they will not raise interest rates substantially. Even if they raise interest rates slightly, it's not going to affect the silver market in a negative way, because anybody in the know knows that they're going to have to raise interest rates. The Federal Reserve is going to have to raise interest rates all the way up to 20% before this whole thing is over. And if you just go back in history, and again, I've always studied history, I made notes, I kept diaries and everything. That's how I had a very strong feeling that these markets 10 years ago were going to do what they're doing right now. And basically, if you look at 10 years ago, we had the beginning stages of high inflation. We had wars in the Middle East. You had Russia that invaded Afghanistan and was not successful. Sound familiar? Iranians were holding Americans hostage. very similar to what's going on right now. And the fact is that silver went from $1.25 all the way up to $50. And gold went from $35 all the way up to $8.50. And I participated in those moves back then. Diamonds went up 500% in those 2 years, and I participated in that. So again, this is something that we're comfortable with, and we're nowhere near close to a bubble. I was out for dinner with some people last night, and there was 10 of us at the table, and I asked everybody what the price of silver was, and only one person knew. So, again, I'm very convinced that we are nowhere close to a bubble. We won't be in a bubble for probably about another 5 years, and that's when the general public will start to buy. Back in 79 and 80, do you know that the general public started buying silver at $35? The people in the know bought it back at $2, $3, $4, and $5, just like we did back 10 years ago. But the fact is that the general public bought silver starting at about $30, $35 back in those days. So again, I think that we got a nice run coming in the market. The next 2 years look amazing for me and to me. And then again, before this whole thing is over, I do believe we'll have 20 to 25% interest rates, and that's when we're going to get out of our positions because the U.S. dollar will be strong at that point, and that will be our exit plan. So again, we've never missed a show in 10 years. We take our business very, very seriously, and again, we take our clients and listeners very seriously. Nobody wants you to make money more than Randy and I do.
Since 2001, gold and silver have resumed their role as a store of wealth, protecting its holders against decaying purchasing power of paper money. And that was one of the things that Richard Russell, and you can read it in our newsletter this week, spoke about, and that is maintaining your purchasing power when your currency is being debased. They're printing money like crazy. Your currency is being debased. You need to protect yourself from inflation and the fact that they're printing money. As events around the world continue to change daily, you need precious metals in your portfolio to profit and protect your wealth. And you can use inflation to your advantage. Turn inflation into real wealth by investing in hard assets like gold, silver, and diamonds. You can stop the destruction of your paper wealth by investing in hard assets for real wealth. And one thing to keep in mind, when you're investing with Worldwide Precious Metals, they can help you manage your precious metals investment account. You can trade the market if you want. You can buy or hold your metal, different ways to be involved. They'll go through all the different ways. They're there to help you maximize profits, minimize risk. They're the experts in this specialized market. And this is a liquid asset. You can buy and sell with a phone call. Keep that in mind. They'll go through all the different ways there are to be involved in this market, but this is a liquid asset. You can buy and sell with a phone call, and they will help you get the real metal, physical precious metals, not paper promises, and they'll talk to you about paper promises. Speak with them at 1-866-623-2002, 1-866-623-2002. The website is www.pmc.com, and call them and get our free weekly newsletter. Get on the list to receive our free weekly newsletter every week so you're informed. Listen to the radio show, get the newsletter, you will be up to date. 1-866-623-2002, the website www.pmc.com. We're going to come back and talk about diamonds as the World Financial Report on radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert, Harold Siegel. We're taping the show on April 29th, 2011. To invest in precious metals, the telephone number 1-866-623-2002, 1-866-623-2002, the website www.pmc.com. You can receive our free weekly newsletter by calling that number or going to that website. You can also get it from Harold. You can connect with him at rarecoloreddiamonds.com, rarecoloreddiamonds.com. And if you do not have internet access, would prefer to do business over the phone, speak personally and privately with Harold, his telephone number, 1-800-432-1022, 1-800-432-1022. 1022. And I would imagine for some people it may be intimidating to pick up the phone and speak with Harold. Harold has received letters to that effect, not because he's a scary guy. He's a warm, cuddly, fuzzy guy, but it's a guy that, you hear on the radio for the last 10 years, and maybe you're a little nervous calling him, but don't be. He'll be happy to talk to you about all your financial situations and talk to you about diamonds. RareColoredDiamonds.com, the website, the featured diamond of the week. This is a very rare 0.29 carat, round, brilliant, fancy, intense, purplish pink Argyle diamond. It's in the newsletter. It's on Harold's website under featured diamond of the week. Very seldom does a round pink diamond become available for sale, and they are difficult to cut, so very few exist. The color and cut of this diamond is exceptional, and Harold obviously highly recommends that you take a look at this as an investment diamond. It is very, very beautiful. Harold sent me a picture, have it in the newsletter. Also went and took a look at it on his website, RareColoredDiamonds.com. But Harold, it is a very beautiful diamond.
Yes, it is, and again, we all know how valuable the Argyle pink diamonds are and what's going to happen with the Argyle mine. The thing that really concerns me with what's happening worldwide right now is, again, the currency markets. Obviously, with the U.S. dollar falling and the U.S. having no intention of raising the value of the U.S. dollar over the short term, again, we could actually find that the U.S. dollar will collapse. I mean, with the derivatives market and the tremendous amount of outstanding debt and everything, that's a major concern. We could also see that happen with other currencies. So the thing is that with the future so uncertain and things happening that, again, most of us have never seen happen in our life, again, you need protection against that. If you believe in insurance on your home, your car, your life, your health, and all that, you need to have insurance probably more so than ever on your financial situation. It isn't just a matter of buying General Motors or Chrysler or IBM or whatever and putting it away for your retirement anymore. Those type of investments don't work anymore. We saw it. General Motors was bankrupt in 2008, as were most of the banks and brokerage firms in the United States. And that situation can happen again. They haven't solved the problem. So the fact is that what asset is going to protect you most against that? Obviously, we know the gold and silver do that, but gold and silver are commodities that are traded on exchanges. You've got different views. You've got people that will buy it. You've got people that will sell it. That's why you get the volatility in that market. The diamond market is so important at this point because, again, it's portable and private wealth. And the fact is they don't trade like commodities, so they don't go up and down. In fact, colored diamonds have never gone down. In fact, it takes 50,000 carats of white diamonds just to find one colored diamond. That's how rare they are. It takes 1 million carats of white diamonds to find one pink diamond. That's why I'm showing as the featured diamond this week this extremely rare round Argyle pink. Those are the diamonds that will go up the most in value. The fact is that the Argyle mine in Australia produces 95% of the world's pink diamonds, which is a tiny number. It's only about 200 carats a year on a good year. So it's enough to fill the palm of your hand, and that represents the majority of the pink diamond market. Here's a very interesting statistic, is that 90% of all Argyle pink diamonds are under a quarter of a carat, so they're known as small diamonds anyways. So the fact is that these diamonds are so valuable and they go up so much in value, and the fact is that the mine is going to close down. We anticipate that these diamonds over the next 10 years will increase by about 1,000%. We just saw that with blue diamonds, and we're starting to see it now starting with pink diamonds. And pink diamonds are very, very popular. They're so beautiful, and they're in the news now almost every day. Well, the Argyle mine is probably going to close its doors because of lack of production, and the mine isn't profitable anymore. And I think that's going to happen, and it could happen by 2016, which is only 5 years from now. Give it 2 years for these diamonds to run out, and you could see an investment of $50,000 turn into $500,000. We saw it with blue diamonds, we've seen it with other diamonds, and we will see it with pink diamonds. The thing is that the mine is producing less and less diamonds. So I'm becoming more and more aggressive and trying to buy as many of the Argyle pink diamonds as possible. I've got a very large following worldwide, not only in Canada, where 80% of my diamonds actually go to, but worldwide we're also very well known because of our predictions in metals and diamonds. But we take care of our Canadian clients first and foremost before anybody. And I'm very, very strongly recommending at this point that if you're in paper assets. If you've got assets like certain stocks that are not performing for you, that are making you nervous, first of all, you should be. The market is much higher than where it should be at this point. It really blows me away that the U.S. stock market, the Dow Jones, is going up at a time where 2 weeks ago they were just about to close the U.S. government down because of lack of funds. So how in the world do you put your money into paper assets when we've seen what's happened with them before? In 1999, when the dot-com companies collapsed and companies like Nortel dropped from $125 to 50 cents, those were in most Canadian RSPs.